I'm Alan Kinney, Editorial Director with REIT.com, and we're at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me is Mary Hogan, Managing Director with APG Asset Management. Mary, I want to start off congratulating you on winning the NAREIT Industry Achievement Award. You followed the REIT industry so closely for years now. What's been the biggest development in the industry in that time?
Well, thank you so much for that. I'd say a real significant development has been the way that the private real estate world and REITs intersect or interact. I'd say, before 2004, 2005, the private real estate world really viewed REITs as an exit strategy. They'd sell assets to REITs to raise money or spin out assets into a REIT at the end of a fund's useful life. I'd say 10 years later, private real estate is just as likely to view REITs as a use of funds and not just a source of funds. Whether you're seeing private real estate institutions acquire REITs because they're trading at a discount to NAV. You're also seeing private institutions interested in doing joint ventures with REITs. So getting at those assets and getting your real estate allocation, but having it managed by a great real estate manager in a REIT. You didn't ask me about the next 10 years, but what I would love to see happen would be a logical extension of this trend where you might see private real estate investors, private institutions using REITs as part of their real estate allocation. Our firm has done that for a long time, and I think more institutions should use REITs as their real estate allocation because of the diversification, liquidity, and just, excellence of the industry.
And the big story next year for the REIT industry as a whole will be the move to a headline sector under the global industry classification standards. How do you see that affecting REIT investment?
I think it's going to be very positive for the industry, not too dissimilar to 2005, I think it was, when REITs were added to the S&P the first time, really opening up REITs to a broader investment base. I think there's a lot of institutions out there who look at REITs right now as a should I own it sector, and it will now be a I have to own it sector. I am a little concerned in the short run, like next summer when this all goes into place. I'm a little worried about volatility as ETFs and index funds kind of sort this out. But over the longer run, I really think this will reduce volatility in the REIT sector, making the returns even look more like real estate as REITs find more natural long-term owners.
And we're here at NAREIT's annual convention, so you're meeting with other companies. Are you finding any big themes or issues or questions coming up in those meetings pretty consistently?
I would say, in the very big picture, what our team is looking at right now, trying to figure out is really where are we in the cycle? As I look broadly across all sectors in 2015, this is really like the best real estate environment I can remember fundamentally. Supply is low and demand is high, and managements are being very disciplined with their balance sheets. So what we're really trying to figure out in our meetings and in our research is whether we should think about extending the runway and this fundamental picture will continue to be very good, or whether we're approaching some kind of an inflection point, whether on the fundamental side or the valuation side.
Thanks so much for your time, Mary.
Thanks for having me.
Be sure to visit REIT.com for more from REITWorld 2015.